What's going on, everyone? I'm back with another video talking about my portfolio in this one. I'm going to show you the shares that I currently own in Robinhood and kind of what my thinking was when acquiring those shares. Some of them are free shares, and I'll explain that in the video as well. So, you see the portfolio value right now is at $313. I started out with $100, and then I've slowly added increments. I've slowly added shares as I've progressed. At this pace I'm at about 3 shares of a new stock every week. So let's get right into it. So PFN, this was the very first share that I bought through Robinhood with my own money without getting a free share from Robinhood. And to be honest, it was a rookie mistake. Now I could sell it, but I think I'm just going to hold on to this one. So going into my portfolio, the whole I would say long-term play for me is dividends. And when I saw this, I said, okay, this is a pretty cheap stock that I can get for a reasonable price that pays a decent dividend. You see my dividend on January 3rd down there was 72 cents, and I only owned about, 9 shares? Yeah, 9 shares, 72 cents. That's not bad at all for a $10 stock. But that being said, that being said, this is a closed-end fund, and the more I read into closed-end funds and open-ended funds, probably not the direction that I want to go in the future. It's really not my strength, but this was my first stock, and I was very new into investing, and I thought, oh, well, I see a dividend, I'm just going to buy it. It's a good dividend. Thankfully, this is one of the only ones that I think I fell for the kind of dividend trap, the yield trap. I do not recommend closed-ended funds, but nevertheless, it's probably the biggest position in my portfolio. It's just the first one that I bought, and I refuse to get rid of it. Next is Sirius XM. This was one that I got off Robinhood for a referral. They just started paying out dividends, which is kind of cool. I mean, it's a horrendous yield, as you see there. That's actually accurate. I checked the stats on that. Currently, they pay out a penny a share every quarter. That is nothing to really write home about, but nevertheless, it's $5.47 a share. It's been rising over the past 5 years, but for those who know Sirius XM, it was a much highly regarded stock when it first merged. Sirius Radio and XM Radio, when they merged, it was very high. I think it reached like 20 to 30, even higher than that, a share. And then people kind of started getting away from satellite radio, and this shares kind of started to tank, as you see here. 5 years ago, it was at $3 a share. It rebounded a little bit to $5.47. Got to be honest, not quite sure why they started paying out dividends. I don't see how it's in their best interest. Maybe they're just they know something we don't. And they're trying to liquidate the company and just trying to pay off the high shareholders. But that's SiriusXM. It was a free share. We move on to CIF, which is another high income fund. Again, I don't recommend this, but it is what it is. It's one of the cheap ones that I bought, $2.96. You see the current share. I did get a 7-cent dividend, as you see on December 30th. But look at that, $58 million market cap, very, very small, and not one that I would recommend either. Another free one that I got from Robinhood, I actually own 2 shares, is Sprint. Very high market cap, $22 billion, as you see down there, $22 billion market cap, very high for a $5.69 share stock, but nevertheless, they're not doing too good in earnings, as you see here. Sprint's one of those weird companies where they're such a huge company, yet they don't really do too well in earnings, and that's been pretty much their MO since they've come into existence. They have reached decent share prices, but as you can see, past 5 years when the market's been skyrocketing, they've been doing absolutely nothing. The next one, all 3 shares are from Robinhood referrals. Chesapeake Energy, $4.27 a share. It's actually been rising as you look over the past month, 14%. Past 3 months, not much movement, but the past month it's been up 15%. Past 5 years, whoa, it's gone way, way down. Look at that. It was pretty much $30 a share, and now it's at its current price of $4.27. This stock has gone way down, but it's 3 that I got for free. Pretty decent sized market cap, $3.88 billion. I could actually see this stock rising to about $6 by the end of 18, but nevertheless, it's not one that I would recommend They do have decent earnings. They have better earnings than Sprint, and I could see the potential. I mean, they were a $30 stock not that long ago, so it could rise, but they're free stocks nonetheless. The next one, CIK, another income fund that I pretty much just blindly put a little money on in my beginning investing days. You can see I have a dividend pending. They paid a dividend last 2 cents, but I've only bought it for $3.30. It's at $3.31. There's not much movement in this stock. There was growth the past 5 years, but it hasn't been like, anything to write home about either. The next one, Zynga, is another free share that I got off of referring through Robinhood. 3.45 market cap, not too bad. Pretty high. The earnings, though, not too good. Much like Sprint's. Their stock has never really been that high. As you can see, scroll up a little. As you can see, at the highest point in the past 5 years, it was only 558. That spike is highly outvalued here in the stock. It's $3.97. The next one is actually, I think, is kind of interesting. Didja Rad. Now, again, I bought them for the yield, but they're not like an income fund or anything. As you can see, a pretty good dividend yield, 4% for such a cheap stock at $2.70 right now. But they've been paying dividends for quite a long time, and I think right now they're a little cheap. I think $5 is actually about right for their stock. That's where it should be. They do lighting and imaging, as you can see down in the about section down. In the about section down here, they're imaging. But they're a small company, obviously. I mean, you look at that really small market cap, 54 million. But I mean, they do have consistent earnings, and they've been having consistent earnings for the past couple of years. I kind of like this little stock, not gonna lie. It'd be one that I would say, hey, if you have $20, yeah, you might as well put that on this stock. Give it a chance. I could see it rising to $5. That'd be a nice little increase on your return, and it pays a nice dividend along the way. I mean, I've only bought it for $4.69, and the dividend yield is 4%. And as you can see, the equity value is $5.40. So I've already made a couple cents on this one. I don't own too many shares. That's why I haven't seen it. But I mean, I bought it right around here, and as you can see, it's gone up pretty much. And I think I could foresee this stock being about $3.50 by the end of the year. Not too much, but hey, I like it. Another one, just kind of going for the dividend here, Capella Utility Trust. They've been paying out dividends for a long time, and pretty good growth over the past 5 years. It's a very cheap stock again. Not too high of a market cap, 309 million. The PE ratio is actually not too good in terms of my eyes, but 3% dividend yield roughly. I bought it for $7.09. It's at $7.15 currently for a 6-cent gain. Nothing to brag about, but I was in this one for the dividends. And we move on to the next one. First Trust stock. This is a European stock ETF. This one ironically, I texted this one to my friend, and I gave him this one and 2 other stocks. I'm like, dude, I want to invest in Europe. Pick a random stock. I really don't care. I like all the yields, and I like the PE ratios of all 3. And he said, all right, well, then just do this one. And ironically, since he's picked it the past month, it's gone up quite nice. I bought it for $13.76. It's at $14.35. The European market usually lags a little behind the American market. So since the American market's doing so well, Europe should see a pretty good increase. I mean, America is over 50% of the entire world market. So when America does good, international markets do good. And you're seeing that with this stock right here, the Europeans. Pays a good dividend, 4.7 yield. The PE ratio, 18. Not bad for how high the yield is. The market cap's not bad either for what the stock is, 566 million. And it's one that I might buy a couple more shares of in the future. Next one, Gladstone Capital. If you are a monthly dividend investor, you've heard quite much about this stock, all the Gladstone stocks. There's Gain, there's Glad, I think there's Goodstone. This is a real estate investment trust. They do like medium in size EBITDAs. I bought this one for $9.22. It's up to $9.42. Over the past month, it's been quite volatile. So you kind of pick your spots with this one. I think this stock's actually a little expensive considering it's been roughly $7 If you go back like a couple years, it's been roughly $7 going back to like 2009 when we had the crash. And right now, I think it's a little inflated at 942. I just sold a lot of my shares on my E-Trade account, but it's a monthly dividend payer. I mean, look at that yield. That is a juicy yield. Is this sustainable? Well, they've been paying 7 cents a share for the past, I think they've been paying 7 cents a share for the past 8 years or so, but it was paying 14 cents a share. So right there, that's a little cause for concern that they had to cut the dividend in half. But it's been staying at 7 cents a share for quite some time now, many, many years. Will it maintain? In my personal opinion, I don't think so. But at the same time, 14 percent or percent 14 PE ratio, price to earnings ratio, not too bad. But their balance sheet has something left to be desired, and actually got their 10K because I had such a large holdings on my E-Trade account. And I'll be honest, I didn't like their balance sheet too much. Move on to the next one. This is Ford. This is one that I have a lot of on E-Trade. I'm pretty high on Ford. I did a video on these guys already. It's on my channel. If you look at my channel, you can see a video I did on Ford. 5 years, not too much growth, $1.98. You can see all the volatility in it. There's a lot of volume here with Ford. Everyone knows what Ford does, their automobiles. But they have a really nice dividend yield, 5%. They have a really nice price to earnings ratio. They have a really high market cap. Ford is one that I am really bullish on. I love the dividend yield, and I love their balance sheet, to be honest, and I love how it's a high market cap. I will be buying more of these shares in the future. Next one, PPL. This is an energy company out of my hometown of Allentown, Pennsylvania. I don't live there anymore, but I know quite a lot about PPL. I bought them because I think they're dirt cheap at the moment. You can see they've been going up for the past 5 years, but they were recently, as recent as September of 2017, at almost $39 a share. They were at 39, and then they've hit quite a wall, and they've gone down to $31. They pay a really good dividend. They have really good earnings, really strong revenues, a 21 million market cap, 14 price to earnings ratio. I bought 2 shares of these for $61.98. It's currently at $62.30. Not much growth, but I mean, I've just bought it. And I really like this for a long-term play. They've been paying dividends since inception, and they've been around, I think since 1987. So this is a company that knows what they're doing. They have split into another company, which is a little cause for concern. And their market growth compared to other energy companies is a little staggered, but I think they're cheap right now, and I think they will recover to $35 by the end of 2018. That's my personal opinion. Final 2 shares. Right here, I bought a John Hancock fund as a premium dividend fund. As you can see, pretty much every stock that I buy needs to have some sort of dividend, or I will not buy it. The past 5 years, this one has been growing, much like the economy, 84%. That is a really good growth. Circle at 84%. Love that. It's a dividend fund, though. And, I'm kind of mixed on advising funds, but I do like dividend funds. You can see 4.3% dividend funds. You can kind of ignore the price to earnings ratios when it comes to these funds. They're more for stable, steady growth. That's the whole point of them. They're not really to make the business a huge amount of money. Market cap's pretty good, pretty much 800 million. I like this one, but I wouldn't be so bullish on it. I think it's also a little overpriced at the moment. They've been hovering around $12 for going back from 2009 to 2016. It's only recently that they've kind of started to grow, surprisingly, and I kind of wanted to hop on, see if they keep on growing and expanding, but you can't be sure with that with funds. But I do like the payouts that they've been doing for dividend yields. And we're at the last stock in my portfolio, and it is Medical Properties Trust. This is one that I just bought. This is one that I'm kind of excited for. They've been raising their dividends for the past 5 years. It's at $12.76. It's got a very juicy yield, a very good price to earnings ratio for its increase in dividend payouts, and it's got a $4 billion market cap. Not huge, but big enough, especially for a $12 stock, and the yield. So pretty much my plays are dividends, and I am learning, guys. As you can see, it's a pretty messy portfolio. I have a lot of, one share of this, one share of that, one share of this, but I'm learning and I'm kind of trying to diversify as much as I can. I mean, 313 bucks. I mean, how many shares can I buy? But that's 300 bucks. I'm not like these guys that can just invest 50K in their portfolio and be like, oh, well, I bought like 100 shares of this. I think it's a, good day trade play. I'm not that kind of investor. I'm in it for the long haul. I'm in it for dividends. So 300 is a lot of money to me, and I'm going to keep on growing it slowly and surely, what I can with my account. Hey, if you want to start a Robinhood portfolio and you like the outline of Robinhood and the idea of free stock trading, well, you can use my referral link that I'll leave in the description down below, where you'll get a free share of stock. You don't have to link your bank account. You don't have to deposit anything. All you got to do is use my referral link when you sign up, and you'll get a free share of stock. I'll get a free share of stock. You'll be helping out the channel, be helping out the portfolio that I'm trying to grow. I will do another video on what I think I'm going to do with my portfolio, and also how I fund my portfolio, because a lot of channels that I've watched, they kind of avoid this subject. They don't like talking about the bigger portfolios, the ones that have like 20 to 100K, they don't kind of discuss, well, where the hell did you get this money from in the first place? And it kind of blows my mind, because a lot of the people that watch these, portfolio videos, they don't have a lot of funds like that. They can just blow off. Like, they're kind of like me, where 300 bucks, like that's a decent chunk of change for them. So I kind of want to discuss, how I do fund it, and I will in another video. It's for another day. Until then, I hope you enjoyed the video. Any comments, please let me hear them down below. I love interacting with anyone who watches my videos. As always, thanks for watching. Give it a like if you liked it, and I will see you guys in the next one. Thank you.